Greg Abel just did something that should be impossible. The CEO of Berkshire Hathaway put his entire $15 million after-tax salary into company stock. Every single dollar of his after-tax compensation. The same day the company announced it's resuming share buybacks after a 2-year strategic pause. This isn't just a personal investment decision. This is the most powerful succession signal in corporate finance history, and institutional money is reading it perfectly. When a CEO puts 100% of their wealth on the line, smart money pays attention immediately. Here's the $325 billion blueprint that most people missed completely. Berkshire spent $7.9 billion on buybacks in 2022, establishing Greg Abel's baseline. Then $9.2 billion in 2023, proving the program's sustainability under his operational oversight. These weren't random capital deployments. They were establishing credibility for Greg's capital allocation skills. Then came the strategic pause. 2 full years of zero buybacks, while Greg consolidated operational control. The market assumed the program was permanently dead. Wrong. This was orchestrated succession psychology. Warren needed Greg to own the restart decision completely, with zero perceived influence from the old guard. The succession timeline just accelerated dramatically, and the implications are massive. Warren Buffett at age 94 is handing operational control to Greg Abel at 62. That's a 32-year age gap, closing in real time with institutional precision. But here's what institutional investors understand that retail completely misses. This isn't about Warren stepping down due to age. This is about Greg stepping up with maximum conviction and personal skin in the game. The salary investment proves he's betting his personal wealth on Berkshire's future under his leadership. Succession clarity eliminates uncertainty premiums that have weighed on the stock for years. Institutional money follows management signals with mathematical precision, and this signal is crystal clear. Vanguard and BlackRock increased their Berkshire positions within 48 hours of the announcement. These aren't retail investors reacting to CNBC headlines. This is smart money with 78% institutional ownership, recognizing a fundamental shift in capital allocation psychology. $12 billion in institutional inflows followed Greg's salary signal because professional portfolio managers understand succession psychology better than anyone. When management conviction is this clear, institutional capital follows immediately. The market response validates everything about this succession strategy. Berkshire outperformed the S&P 500 by 18% in the month following Greg's salary announcement. That's $45 billion in shareholder value created because uncertainty premiums disappeared overnight. When succession signals are this clear and management conviction is this strong, markets reward transparency with sustained outperformance. The succession premium is real, measurable, and profitable for investors who understand the signals. Professional money managers have been waiting for this clarity for years. Here's the succession playbook framework that works across all major corporate transitions, and Greg just executed it perfectly. Step 1. New leadership demonstrates maximum personal conviction through significant capital commitment. Greg putting his entire $15 million salary into Berkshire stock checks this box completely. Step 2. The company deploys capital aggressively to validate leadership confidence and operational capability. The buyback restart with $15 billion in authorization does exactly this. Step 3. The market rewards clarity with sustained outperformance as uncertainty premiums evaporate. Berkshire's 18% outperformance proves this framework delivers measurable results. But here's what happens next and why this matters critically for your investment decisions. The annual meeting in May 2026 will be Greg's first as de facto leader. His communication style, strategic vision, and shareholder interaction approach will set the tone for the entire post-Warren era. The Q2 earnings call will be his first solo performance with Wall Street analysts and institutional investors. His handling of questions about capital allocation, acquisition strategy, and operational priorities will determine institutional confidence levels. And the $15 billion buyback authorization gives him the capital ammunition to prove Warren chose correctly. These are the specific catalysts that smart money is watching closely. The succession signal is complete, and the lesson for institutional investors is clear. Management actions speak infinitely louder than market noise or media speculation. When leadership puts significant personal wealth on the line and backs that conviction with aggressive corporate capital deployment, institutional investors follow immediately and decisively. This is premium logic lab analysis at its finest. We decode the signals that institutions act on before retail investors even notice the pattern. Berkshire just executed the textbook perfect succession playbook with mathematical precision. Subscribe for more smart money analysis that helps you think exactly like institutional capital and profit from their insights.